Weekly pending home sales continue to come in very strong compared to last year. In our count this week, there were 15% more newly pending contracts than the same week in 2024. 15%. Last year at this time, mortgage rates were marching higher, headed back to 7%. So it's no surprise that sales would have been slowed down at that time. But the difference is frankly surprising to me. Buying a house now is less expensive than it was last year. I suppose that therefore that means more people are buying them now. It wasn't just a 1 week surge either. The recent average of weekly pending home sales is coming in nearly 5 or 8% more sales each week than in 2024. Any 1 week might be up or down for whatever reason, but recently a pace of 8% more home sales growth is notable growth. In fact, there are more sales happening now than in any November since 2021. By the autumn of 22, the post-pandemic era of high mortgage rates had already kicked in and sales had dropped way off. So this is now the highest level in November since 21. So this tells me a few things about next year, 2026. If mortgage rates manage to stay in the low sixes, then 2026 seems quite likely to see decent growth in home sales. Americans have been delaying moves for 3 years now, and some of those delays are people are tired of waiting now, and the market is growing. If we're lucky with rates, this could be the signal that we're finally moving into a new cycle with residential real estate market. So now, even though sales are improving, home prices are still under pressure. So it could very well be sales growth in the Sun Belt is coming from buyers who are finding ample supply, very little buyer competition, and prices that feel like maybe bargains for the first time in many years. So think about it this way. If I'm a young family in Austin and I've wanted to buy a home since 2022, home prices are now cheaper. I have tons of selection. There are no bidding wars, and my income is probably up pretty solidly in that time. So this is not a hot market, but you can understand why the market would finally bounce back from the post-pandemic lows. So keep in mind that since there are a lot of homes for sale in places like Austin, there are no signals that home prices are going to climb anytime soon in response to slightly increased demand. But available inventory really means that there's plenty of room for home sales to grow in 26. Keep in mind also that much of the country still has very tight inventory. The narrative about improved selection for homebuyers is not yet true in Chicago or New Jersey, for example. So it would be difficult for home sales to grow in 26 in those parts of the country, if inventory hasn't risen yet. There are still simply not enough homes for sale. If it's not for sale, you can't buy it. I've talked a lot about this north-south bifurcation in the U.S. housing market, so I won't repeat the details here today. The takeaway is that, on average, across the country, home sales are notably higher, marching higher, even as, or maybe partly due to the fact that home prices are lower in many markets. So let's start today looking at the weekly pending home sales data that I've been talking about. In this view of the weekly pending data, we have single-family homes with a recent average of 61,000 new contracts per week. Condos now another 12,000 on average. But that compares with only 56,000 per week last year. 61,000 now to 56,000. So that's an 8% growth on average. This is a 4-week rolling average to smooth out some of the weekly noise when the data jumps around a bit. And it helps you see here, the blue line here is above the levels of any of the last few years. You have to go back to November 2021 to find more sales at this time of the year. November 21 was right in the middle of the pandemic boom, so that's not surprising. Again, I attribute this modest but measurable sales growth now to mortgage rates at the low end of where they've been for 3 years, plenty of selection in much of the country, and price declines or simply bargain hunting opportunities for the first time in many years. So the holidays are now nearly upon us, so the sales rate will march lower until after the new year. Mortgage rates have been slowly inching higher over the past several weeks, so we'll see if our luck holds and if interest rates stay low enough for this pace of growth to continue into 2026. I'm keeping optimistic. Meanwhile, we've counted nearly 58,000 newly listed single-family homes, plus another 12,000 condos this week. That's about 5% more sellers each week than a year ago. So I think it's notable that we are showing sales growth of 8% and new listings growth of only 5% over 24. That's another signal for stronger demand as we look at the overall picture. But there are not a lot of home sales now, but it remains a bit above recent years. And so one thing to keep in mind is that most sellers are also buyers. So we should expect that both new listings and new pendings rise in tandem. If pendings rise without listings, that's the pandemic boom scenario. If new listings rise without pendings, that's the opposite and a much more bearish signal. As of now, both new listings and the pendings are coming in each week a few percent ahead of last year. So that implies a growing market as we roll into 2026. So that's an optimistic pattern in my opinion. If new listings were moving higher, but sales were staying low, that would imply that inventory keeps growing, that further price pressures are forthcoming, but we do not see that happening now. The new listings count is up 5% from last year. The newly pending count is up 8% from last year. So in this chart, so we have the new listings count. The blue line is just above last year's purple line. The chart here is a similar shape as the weekly pending sales that we just looked at. This year is slightly more than last year. This is a good sign and good momentum as we roll into 2026. So sales growth is happening. What about prices? Well, as far as pricing goes, I think this view of price per square foot tells the story of the moment. Even as home sales are rising, prices are dipping. So this week's asking price per square foot came in at just over $211. That's 1.3% below last year at this time. You know, prices always have a seasonal peak in June before receding in the second half of the year. This view of asking price per square foot is really useful in my opinion because you can see that seasonal pattern. You can also see the trajectory of the seasonal decline is pretty steep in 25. Right, the blue line is sloping down faster than it did last year or in 2023. So if this holds up, prices could come in under that 23 line before the end of the year. So the blue line is currently aiming under the orange line from 23. Price per square foot is a handy measure because it illustrates this very clear trend. It's also a real-time measure, so these are asking prices right now. These are homes that are on the market. They will at some point take offers and go into contract in the next few months and then close the transaction a month after that. So this view shows us, I think, a pretty powerful view. Even though all the headline measures of home prices are still positive, by this measure of home prices, they're negative compared to last year. All of the other headline home price data you hear is stepping down each month as it gets released, but in this view, you can already see where the slow data is heading. When we look at the other leading indicators for the future sales prices, it's notable that these are not really improving. So the percentage of active listings that have taken a price cut from the original list price is still at the elevated level we've seen all year. 41.5% of the homes on the market have taken a price cut. This time of year, you'd expect price reductions to be receding each week, but that really hasn't kicked in yet. Price reductions came in just 30 basis points fewer than last week. Normally, as you approach the holidays, your house is listed, and if you haven't seen any offers, that's the period where withdrawals normally start climbing. You know, we'll take the home off the market for the holidays, we'll relist in the spring, but this year withdrawals are already elevated. So this tells us that the buyers who are out there are not willing to overpay for a house. So normally price reductions would be moving lower each week by now, but in this view, notice the blue line for 25 is still higher than any year except that moment at the end of 22. That's the yellow line. So that at the time of 22, rates had jumped higher faster than anyone had expected, and everything ground to a halt. So 22 teaches us an important lesson because it was looking really bleak at that time. Home prices and home sales were dropping, but by Q1 of 23, mortgage rates had fallen back close to 6%, and that freed up demand and stabilized prices by the end of 23. So it looked bleak at the end of 22, but dropping mortgage rates turned the tide pretty quickly. So I like to say that consumers are more sensitive to changes in rates than to the absolute levels, and the 22 data illustrates that clearly, I think. So now we're at a point where rates have been staying in this tight range for the year. We're at the low end of that range, and home sales are picking up, but there's not enough momentum in the data to show price support like we saw in early 2023. Finally, today, we'll wrap up with a look at the active inventory levels. Inventory has been quite stable since August. Not much climbing, but also not declining very much. So there are now 839,000 single-family homes unsold on the market. That's down a bit for the week and is still 16% more than last year. The momentum for inventory in 26 is for continued growth, but it'll be much slower growth than it was for most of this year. So we're anticipating about another 10% inventory growth for next year. That growth will continue to both the trends we're observing now. So home sales have room to improve because there are more homes available, but also price pressures will continue to be in play. A new trend to watch for in 26 is whether the Midwest and Northeast markets finally start seeing inventory loosen up some. So there are some signals that maybe that's starting, but places like Chicago or Connecticut still have a long way to go before that ample selection there helps apply to home buyers. So that's a trend to watch for 2026. Okay, that's all the data we have time for today. If you want to make sure you don't miss any of the weekly data and video commentary, you should sign up for our email list. There's a link in the description below. Add your name to our list. All right, thanks everybody. More next week.